Hey guys, it's Simon with Trade and Perform Coaching, doing a little bit of a market preview, a little bit of a trade review from yesterday. Um, you know, um, Days like today can be really, really tough on a day trader. I think that's a good way to put it. And the reason for that is you had to know that we weren't going to repeat what we had occur on Tuesday, and that we were going to actually get an upside break, and then it forced you to buy the upside breakout. So before we get started, and I'm going to make this brief tonight because it's late, I'm tired, but I think there were some important lessons to learn from today, and I definitely want my coaching clients to be able to see it before we get into tomorrow, right? So let's do that. Before we start, I needed to give the legal disclaimer. That's right here. And so let me read that. It's an important disclaimer and reminder for all traders and investors. The webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. The long and short of that is, I'm here to help people learn how to be good traders, to improve as a trader, to move from being a boom bust to a consistent trader, and this is to help you do better. That's it. There's no other reason, and to help myself do better as a trader. There's no other purpose behind it. There's no other magic. So let's get a clean cloth kind of going here, because when you look at the chart just when you're coming in, and let's go first to a 5-minute chart. Let's go to an ES.D. Okay, so what I was trying to figure out is, how do we figure out that today, when we look at this PA right here, and when we look at this PA right here versus this PA right here, right? To me, they look kind of similar. Actually, this one looks a bit worse. And how do you figure out that we're going to break to the upside? And I'm going to cover that in just a second, how we could have figured it out. And then also, importantly, how does that merge into my trading style, right? So I have specific entries that I need. First of all, I need a rotation down because I want to catch panic sellers on the move down who are giving me an entry and opportunity to move to the upside, right? Secondly, I don't chase, I don't buy up, I do not, except for gap ups, right? If we gap up and we have an open drive higher on that first zero tick, I will take a long on that trade, and then I will take subsequent negative 600 ticks on the NYSE tick as posted by TradeStation. I will look for longs in those areas, right? But the gap up was minimal. Secondly, the first bar was red, and the range was really tight. We traded between 24.14, essentially 12.75 was the low, to 16.75. If you look on this date here, we opened at 24.08. We moved up to 24.12. It was about the same 4-point range. And additionally, if you look, we kind of had this descending wedge that was forming in here. It just didn't look all that bullish to me, right? Additionally, we had just come off the day before. And what I'm listing is the challenges. And the reason why I list those challenges is, to me, it's really hard to shift gears from, hey, we had a market that started with the first 15 minutes was pretty tight and small, right, with red bars, and that rolled into effectively a move from 24.16 all the way down to 24.04, a 10 to 15 point rotation lower, right? And how do I know to shift those gears from one day to the next? And the answer is in the first 15 minutes, I don't think you can know. That's just me. There were some clues, right? And we're going to cover those in just a second. But I don't think you can know, and I don't think as a trader, I think as a trader, you have to know what is your trade and follow that plan. I have specific menu or selection of trades that are in there, and when I spot those setups, those are my trades. That's what I'm going to execute. If the market never rolls down to the downside, it's going to be a very rare day where I have an outlier execution that I recognize and I'm going to be able to take the trade. However, there were a couple things that kept me safe. Number one, I don't short, at least aggressively, the top fifth of the market, and certainly when there's no indication of a breakdown, right? So there's a few differences on this day than on other days. So let's cover what I could have done better, because that's always the goal. What could have I done better? On this date when we traded sideways and balanced and the range never expanded, and on this date where we never expanded, here this was the prior high, right? And we were never able to get above it on this particular day. On this day, here was the prior high. We were never able to get above on this day. That switched a little bit, and I did not catch it. Here was the prior day's high, this 24.15 1/4, and once we got above and held above 24.15 1/4, it was really off to the races. So we tried the first time, we tried the second time. It's not that because I'm throwing my mouse this evening, it's not that I would have tried to catch the long side of the trade, but I want to be able to learn to see if there was something there that I could have caught for the next time. Secondly, I had a trade plan, and that trade plan allowed me to come in certain areas. The most aggressive area I was willing to get long this morning was into the prior day's volume point of control, which was sitting right here at, why don't I have it? Oh, I know why. Here we are, sitting right here. I've actually lifted it, but I had it in this morning. It was sitting right here at about 24.1275 or 24.1250 was the prior day's HVN. It was sitting right in this location, and I was willing to take it the first push down. It also would have completed this poorly auctioned area right here. And so this is where I was willing to take my first trade. It also would have been a rotation down from 24.16 down towards the 24.10, which is right now with a narrower range and the very low VIX. I'm willing to take it anywhere from a 5 to 10 point rotation if I get the sign that we could get set up. So the answer to that is I didn't get any of those trades, and that's okay, right? Now, I want to show you where I could have taken an aggressive trade. The other place I could have taken an aggressive trade was, you'll notice that this was the low tick of the day on this bar right here, and you'll notice that we failed to penetrate below the low there. That was the other place where I could have said, hey, we failed to take the trade out. Here's why I didn't take that trade. If I would have ended up getting stopped at the low of the day, I would have had to be ready to reload at the prior day, which would have been Wednesday's volume point of control, for a long here. And psychologically for me, it's just difficult to take one very aggressive trade and then have to fire off on what would otherwise be a higher odds trade for me, and then end up with two stops back to back, which is my maximum stops for the day. If I get two full stops back to back for the day, I'm done trading. So I simply made a trading decision, and this is really, really important idea, right? I consciously made a decision not to go long here so that I could have the opportunity to go long here, and the market just didn't afford it. This is where a lot of traders go off track, and I want to take a second to speak about it. A lot of traders come in and they try to be perfect no matter what the market offers them, and they feel they have to capture what the market gives them. I don't, because I know that that's what leads most traders to draw down. I think if you could have sustained taking the long here and you would have reloaded here, you are fine. But since we never made it to the push below into this key location, I basically didn't get long in what otherwise would have been a beautiful trade plan, right? The next part of the trade plan that never came up was on this break of the initial balance high, the next plan was to take the first 50, 60 back. So let's say this had been the high right here, and we had retraced back into this 2416, 2417 location, essentially a revisit to the scene of the crime. That was my second long entry. It never developed, and so I didn't get it. But I did something that was really, really important, and that's this. I did not short this entire move. And when you're a bad trader, what happens is a trader will go, and as a matter of fact, Ian, one of the gentlemen in the room, texted me. He goes, you know that there's a trader right now, when we got to this 24.23, 24.24, who said, there's no way it can continue going up. We've already expanded what the average range is to the upside, and I'm going to short it. And you know there was people coming in here and shorting. And you know why we know that there were people coming in here and shorting? Because this pop here at the end of the day and the continuation into the evening that we're having right now, all the people who were, remember, at every stage of the market, you have opponents. You have one group of people selling, one group of people buying, and one of those groups is going to win. And sometimes they'll duke it out over a long period of time. But whichever side loses this fight is going to have to surrender and fall on their knife. And that's what's going on here, is that the shorts are giving in. What people were looking for here, shorts, were saying, hey, we'll probably get some profit taking into the close. When that profit taking didn't materialize, they were forced to come in and push up. Now, there were some other signs. There were some other signs that we had a lot of strength this morning. First of all, look at the lack of negative tick on the NYC. It's almost all positive and to the upside. To give you a comparison, on days when we're weaker or we push down, you'll see that the tick opens positive and really gets deeply negative through the course of the day, and you'll get consistent rolls back to the downside when that occurs. Okay, we had none of that today, so that's a change in character that you're looking for. Again, I realize none of this is glamorous highlight stuff where you're like, oh my gosh, but it really helps. Really helps knowing, hey, I don't want to short a tick that's positive all the way through until the very end of the day. And then the other clue here at the end of the day is, look, tick actually gets negative. What this tells you is the broader market was getting some sell pressure, right? Not heavy sell pressure, but some sell pressure, and the S&P 500 just was not responding to it whatsoever. And so when people saw this sell pressure, if they came in and started trying to press to the downside, they had to come in and squeeze, and the squeeze is pretty nasty. From the low, it rolled from 24 all the way up to 30 on the close. So that was 6 points of squeeze essentially in the last 30 minutes of the day, and that's a painful way to be. So anyways, I'm going to keep it short tonight. It's late. I'm tired. Here's the main takeaways from the day, guys. When the market doesn't give you what you want, it doesn't mean you just go grab any trade off the table, right? The number one thing that keeps traders consistent is having a predetermined trade, right? Predetermined entry, predetermined management of that entry, stop, entry, exit, predetermined maximum stop loss of the day, right? And the knowledge, the strength and knowledge to know that, hey, even if the market didn't give me my trade today, it will give me my trade tomorrow. So anyways, long story short, I'm going to post this video. If you didn't make money today, it's all right. The market never rolled down to give you a key high odds entry, right? You will always see people who say, oh, I bought this. Well, my question would be, if the people bought this and they figured it out, and some people legitimately did, right? There are some people who were willing to take the risk that we weren't going to roll down. But remember, the majority of people who bought this here today and made some money, if they were able to hold all the way to the close, which is doubtful, right, are the same group of people who get crushed and rolls to the downside here and never say a word about it, right? So don't be caught up by the illusion that everyone's trading this perfectly. There's only one thing that matters, and that's the trades you're taking and how well you manage them. Don't care about what anyone else is trading or what they claim they were able to capture. All that matters is your P&L at the end of the day and avoiding the boom-bust cycle. Most important thing. Anyways, my name is Simon. I'm with Trade and Perform Coaching. We do this every day. We come in, we look for high odds setups. We manage our trades. We manage the market, right? We look to improve our edge on a daily basis. And most importantly, in the mentoring aspect of the room and on the one-on-one coaching, to bring out the very best in each trader so that you can be the best version of yourself as a trader, which usually means avoiding becoming a boom-bust trader and stacking up chips day by day. I believe anyone can learn to trade if you're willing to do the work. I hope everyone had a great day today. I look forward to tomorrow. Y'all have a good night. This is Simon. We'll talk to you soon.